Hello, dividend growth stock investors. It is Colby, the DGI Crab, coming at you with the great ETF race all the way up to episode 11. What I'm doing with this series that I do every other Tuesday is investing $5 a week into 8 very popular and high quality dividend themed ETFs. The point of the series is to show that anyone can invest into the stock market without a lot of knowledge or without a lot of money to put to work. It doesn't take a ton of money to start building up a nice stream of passive dividend income, and you can do it without really having to worry about doing a lot of research. You could just pick 1 or 2, maybe even 8 different ETFs, spread that love around, and you can start building up that passive income. That's what we're all about here on this channel, is investing to reach financial freedom and get a stable flow of dividend income that's going to go up, not down, whether you're reinvesting your dividends or not. SCHD, VYM, VYMI, VIG, VBR, DGRO, DHS, and SPYD are the 8 racers in the series. Now, I would like to say I'm not a professional financial advisor. Do your own due diligence before you invest any of your hard-earned money. So here's where we are at here. Got $110 invested into each of the 8 different ETFs for a total of $880 invested. This is my dividend payouts that I have received thus far. So not a ton here just yet, still sitting at just $395 overall. I'm within just a few days of getting that monthly DHS dividend payout. DHS is the only one of these 8 ETFs that pay out monthly. The other 7 are all quarterly. The other ones all pay out on the 3rd month of every quarter. 3, 6, 9, 12. DHS pays out every single month. So DHS is going to have a little bit of an edge through the month of November and early December, because there's a couple of payments that are going to come through from DHS before the other 7 levy a payment. Now they're smaller payments because they come through every single month, but they will have a little bit of an edge. DHS sitting here in the number 2 position still, with the small cap VBR maintaining the number 1 position for the 2nd episode in a row. SPYD has recovered from 2 weeks ago. It was down in 7th place, and it's rebounded back up to 3rd. But most of these are all pretty well within each other here. You can see the overall gain on the portfolio. I'm up $57, not too shabby for an $880 investment. So I'm up more than 5%. I've only been at this for a few months, really, at this point. So no complaints from me whatsoever. And especially when you consider just $395 of that profit has come in the form of reinvested dividends. This is all just, just gains on the share price so far. So certainly not bad. Definitely feeling pretty good about where all of this stands. And when it comes to dollar cost averaging into ETFs, it's all about just being steady and consistent, you guys. Just having a minimal amount that every single week I'm going to commit to putting X amount of money into my ETF positions at a minimum. And then maybe here and there on some weeks, maybe you get a bonus or some overtime, or just you side hustle, or just some extra money comes through that maybe you weren't expecting. And you'll see that if you really commit to this, once you've made some progress and you've started to work up a decent little pile of money, and you start to see that income coming in, you'll have more weeks where you're like, oh my gosh, I need to work a little bit harder to see if maybe I can get a little bit more. So like, say you're doing $50 a week, or even $40 a week, like I'm doing here into this particular portfolio. And then, you get, let's say you get a bonus at work, right? Maybe you get like $500 or $1,000, or just, some extra money comes through you weren't necessarily anticipating. Well, there might be some other uses for that money as well. Maybe you want to do something nice for yourself or for your family, or whatever the case may be. But you might also say, yeah, you know what? I'm going to take a little bit of that, maybe an extra 100 or an extra 200 of that, and dump that into these investments so I can start to, just supercharge that position and really continue to add some snow to that dividend snowball. I think you'll see that as you continue to go along, you'll have more and more motivation to just kind of find that extra money, that motivation to maybe work that extra hour or two of overtime, or to just pull the proverbial change out of the couch cushions, right, and just find a few extra dollars here and there to make this work for you even more. Because the longer you stick at this, the more and more you're going to see some really major results out of it. And again, with the ETFs, like holiday weekend coming up and stuff, maybe you just got a lot of things going on. You don't have the time to sit and research different stocks and see what looks like a good value at any given point in time, certainly on a week like this. So maybe this is a week you do an ETF double down and you just say, I know that there are some positions that I like that are out there, but I'm really not paying attention to the peaks and valleys in the market. So it's just all going to go into ETFs this week so I can continue to invest, stay invested, but not have to worry about the individual research on a holiday week. So a lot of reasons to like ETFs. I really enjoy all 8 of these, but I will say that because this is an age investing themed channel, if you are making ETFs a big part of your investment, I would say stuff like VIG and DGRO are nice choices in your younger years because the yield is going to start out lower, but the yield should grow year over year at a very rapid clip. Your DHS, VYM, SCHD, kind of good for that middle-aged investor. By that I mean like maybe mid to late 30s into like early 50s. Starting yield will be a little bit higher. Maybe the dividend growth rate will be a little bit slower or a little bit more hit or miss than your DGRO or your SCHD. But again, your starting yield will be a little bit higher. And then for the older investors, something like SPYD is a very stable and steady one that starts out with a higher yield, doesn't have a rapid growth rate, but should be really consistent and stable and not give you a whole lot of things to worry about. I've already got enough gray hairs coming in when you're in your 50s, right? I've got plenty coming in now in my 40s. So it's nice to just have, positions that you don't have to worry about. And then, man, with VBR, this one's really performing really well, and it's nice to have exposure to the small caps because if you've been hanging around this channel for very long, I focus in on 60 high-quality dividend growth stocks. I'm not messing around with the small cap stuff just because I want stability. I want to be able to sleep well at night with the positions that I do have, but it doesn't mean that I want to ignore that entirely, and VBR has been a really nice one for me to give me some dividend income and hopefully some share price appreciation as well. So what do you guys think? We've got another month and a few more days left in the year. Which one of these do you think is going to be in the lead from an overall value at the end of the year? Let me know what you think down in the comments below. Email me your questions at dgicrab@yahoo.com, and I will see you on the next one.